Small business is big business. The sponsor of today's episode, Busey Bank, understands that small businesses are the lifeblood of our economy. For more than 150 years, Busey has remained a dedicated partner to those businesses and entrepreneurs who bring vibrancy to the local community. Through sound advice and simplified solutions, Busey proudly supports small businesses. For an array of business solutions tailored to your specific needs, visit busey.com, busey.com. And if you're seeking a business acquisition loan, be sure to reach out to the head of their SBA group, Steve 𝐿𝐵𝐺𝐻𝑒𝐿. Steve's somebody I've known for almost 15 years. He's one of the best SBA bankers out there, bar none. And you can reach Steve at steve.𝐿𝐵𝐺𝐻𝑒𝐿@busey.com. That's Steve, S-T-E-V-E, .𝐿𝐵𝐺𝐻𝑒𝐿, LASIEWICZ @busey.com.
Looking to buy, sell, or grow your business to position it for a sale? As the owner and managing partner of Sun Acquisitions, Dominic Rinaldi has personally been involved in over 300 M&A transactions. He has seen and done it all, consulting with large and small businesses across a broad range of industries. On M&A Unplugged, he'll interview buyers, sellers, and their advisors about their experiences scaling, selling, and acquiring businesses. On every episode, you will get key learnings, but most importantly, you will be better prepared for your own acquisition or sale. This is M&A Unplugged with your host, Dominic Rinaldi.
M&A Unplugged community, we are in for some great insights today. Andy Kelleher, co-founder of the Kelleher Buckley Law Firm, is here to share his extensive experience regarding M&A transactions and estate planning thoughts for business owners. Andy concentrates his practice in trust and estate law, business law, and asset protection planning for high net worth business owners. Being both an attorney and a CPA, he has earned the respect and trust of both clients and peers alike by never prescribing advice that he wouldn't take himself. I've known Andy for a number of years. We've had the opportunity to work on a few deals together, and I can say without reservation, Kelleher Buckley is a top-tier law firm. Andy, very excited you could finally find an opening in your busy schedule. Welcome.
Hey, thanks, Dominic. I appreciate it.
Yeah, so Andy, why don't we start with a little bit of background on yourself and the firm. Let everybody know, who you are and what you do.
Sure. My name is Andrew Kelleher. I'm with Kelleher & Buckley, LLC. My concentration is, just like you said, Dominic, you're working with business owners on their estate planning, tax planning, asset protection. And the firm is located primarily in North Barrington, Illinois, but we have offices down in Chicago, and we also have offices down in Naples, Florida.
That's great. And you, along with your partner, David Buckley, founded this, many years ago, right? And you've grown the firm tremendously over the last, at least since I've known you. It's amazing to see the growth that you've had.
Yeah, it's been a lot of fun. We started the firm in 1997. My partner, Dave, and I have had a lot of fun growing the firm. We're approximately 55 people now, 55 plus actually, and 27 attorneys. And yes, it's been a lot of fun. The primary focuses of our practice would be, we have a corporate practice group that does all things corporate. We have an estate planning group that does all things estate planning and trust administration, probates, and the like. And then we have the litigation practice group that backs up both the corporate practice group and the estate planning group when, unfortunately, litigation does arise from time to time with folks. And we have the ability to handle that, which is a very valuable thing, to have that litigation practice group in back of the corporate attorneys and the estate planning attorneys, because when you're negotiating a deal or negotiating with a beneficiary, if you're representing a trustee or vice versa, it's good for the other folks out there to know that if push comes to shove, that you have the resources to handle that.
Yeah, and I imagine it also gives you the ability to get ahead of the curve, right? I mean, if something gets to litigation, those guys can advise the other sides how to keep themselves out of that to begin with, right?
You got it. Yeah, one of the themes that we're constantly professing here is an ounce of prevention is worth 5 pounds of cure when you talk about staying out of litigation. And, having a great litigator who's great in court, backed up by wonderful technicians that we have at the corporate practice group and the estate planning group, that's a very powerful combo.
Yeah. Well, hey, and congratulations on all the growth. I mean, you guys really have had some explosive growth and doing some great things. And like I said, you had opportunity to work with you guys a number of times, and I think your firm is awesome. So, Andy, sticking with the M&A theme, I know you work with a lot of business owners as they're starting to think about succession planning, the next stages, whether that's going to be selling the whole business or passing it down to the next generation or maybe key employees. So maybe if you could talk about in that pre-planning stage, what are some of the issues that come up from a legal perspective that you wind up, dealing with business owners that are contemplating that next step?
Sure. When people are planning to sell their business, the starting point that we begin with is actually the end of the cycle, which would mean the business owner has sold their business. They're sitting there with assets such as cash, maybe stock in the buyer, or some type of promissory note or other consideration. And we kind of say, what does life look like for that owner post-sale? And what would we want that picture to look like, both financially and from a legal structuring perspective? Usually we would say on the family's personal estate planning perspective, post sale. So we begin with the end.
That makes a lot of sense. You have to envision what you want next. And we always find that when people can't tell us what they want at the end, that they may not quite be ready. And we actually challenge them as to whether or not this step is the right step.
You're right. And then, so if you start with what does the post-sale life look like for the business owner and the business owner's family, then you start getting into the fundamentals of starting the planning process of selling the business, should start, a few years at least before the owner actually sells. Because when we actually go into the business and start speaking, with the business owner, you start seeing a lot of, issues that we see all the time, Dominic, such as client concentration, supplier concentration, maybe some employees that need to be, realigned, maybe the owner themselves, which is that we see a lot. Maybe the owner hasn't delegated enough in the organization, and has retained too much control. We run into that all the time. That could hurt the owner's value upon sale. So if we have a little bit of lead time, we work with wonderful organizations such as yours and other advisors that we can bring to the table to really work on how can we create that value ahead of time for that owner. And in that process, how do we get the legal structuring in place at the estate planning level, reorganizing how the equity is valued, how the equity is placed among various entities and trusts, and really set up that value growth in the right trusts and LLCs. So when at the time of sale, we're ready to roll. And also once it's sold, that post-sale, everything's kind of preset.
Yeah, it makes perfect sense. So Andy, I imagine if somebody's a client of yours, you're talking to them about these issues well in advance, and hopefully they're following your advice and, taking the proper steps from an estate planning perspective. But let's say you get introduced to a new client that has come to you and said, hey, I'm contemplating a sale. What sorts of issues do you see that most of those prospective clients have in regards to their estates and their estate planning as it relates specifically to going down the path to selling their businesses?
Yeah, Dominic, what we see with a lot of business owners is a lack of coordination between the business level planning and the personal level estate planning. So, for example, at the business level, what we see as lawyers is sometimes the people that are closest to us are the people that are going to cause the business owner the most problems. And obviously, we want to avoid problems and get things smoothed out before we'd ever go to sale. So, for example, making sure that the relationships with the partners or other members or fellow shareholders are good. So making sure that the legal documentation, such as buy-sell agreements, making sure the proper life insurances are in place, are important, and making sure that those business owners are communicating with each other in a formalized manner. So, for example, the old school method of sitting down with all the shareholders and actually having a meeting where minutes are taken are really important right before. It's really important all the time, but in those preparation years before sale, it's important to make sure that all the business owners are literally on the same page to avoid any problems and manage expectations correctly. And that really keeps the peace, during the time before they would sell, and really helps avoid any pitfalls with the people closest, to each other before sale. Also, the other topics that we see is just making sure that things are lined up with, with employees, especially key employees. Sometimes those people are invaluable to the ongoing business while people are contemplating sale. But at the time of sale too, making sure that those people are well taken care of, are going to be staying with the business if they're critical to the business, and making sure all the legal documentation is in place to facilitate that.
Yeah, that's tremendous. I mean, these are some of the issues that when people come to us and haven't done the proper planning, they're really having to scramble to right the ship and do some things hastily, or they don't even do them, and then they have to deal with these things after the fact, which, as you know, is very painful. So can we dive into, buy-sell agreements a little bit in life insurance? Let's talk about how you help people, internally get comfortable with buy-sell agreements. And is there a lot of education, I would imagine, that's involved in that?
It's amazing to most lawyers, just amazing to me, how many people have a business with a partner or fellow shareholders, and they don't have a buy-sell agreement. And what does that mean? Fundamentally, a buy-sell agreement, what a lot of people would look at is that, if you and I were partners, Dominic, I couldn't sell to somebody else. You would always either have a right of first refusal, if I was voluntarily going to sell that to somebody, or if something bad happened to me in my life that was involuntary, like I became mentally disabled or passed away, that you would also either have a mandatory obligation to buy out me, or you'd have a right of first refusal. But it's amazing to me how many people haven't thought about that. And in the cases that we've handled, when there's not a buy-sell agreement, back to the theme of an ounce of prevention is worth 5 pounds of cure. Then what happens is, like in my example, I become mentally disabled, the worst situation. I'm still there. I still have needs as a person. I'm not producing any value or income for our company, but yet I still basically have legal rights to distributions. And then unfortunately, and I'm not disparaging my wife at all. However, but the idea would be, in many cases, you would be dealing with my wife, or basically that person's spouse, in negotiating those type of things. And that person has no context or corporate memory as far as what's gone on between us as, fellow business owners in my example. And that leads to a lot of problems. They bring in other professionals who are doing the best they can, such as lawyers and accountants, to deal with issues that could have been easily addressed, such as valuation. And there can be a lot of interpretations of valuation, and that leads to a lot of disagreements. In addition to valuation, how is the company actually going to pay that person? Or does the company have to pay that person? So the issues can get very, very complex. And it's pretty simple. The concept is, if people do put together a buy-sell agreement and a shareholders agreement answering these questions ahead of time, if something bad happens to one of the shareholders or partners, how is the business going to be valued? That's a really big deal. And once it's valued, how is the person who's departing or their estate, how is that value going to be transmitted to that person? So are there going to be promissory notes set up? Is there going to be a cash payment? Many times life insurance is the best way of handling that in a death situation, because you have a lump sum of money that can, just pay the departed person right away or their estate. But the buy-sell agreement answers those questions ahead of time. And again, if there's less questions, there's less chance for controversy. And if there's, disagreement, it can lead to, elongated litigation and a lot of bad feeling.
Yeah, Andy, I've got a client right now. There are 3 partners and no buy-sell agreement, and 2 of the partners want to sell and the third does not. And they don't even have anything in their agreements, their shareholder agreements, that allows for, majority to force the sale or anything. And so they're literally in limbo and can't do anything, and they're stuck. And that third partner doesn't want new partners. He wants them. And so they are really in a bad way. And so really the time to contemplate this is upon formation. Why, in your opinion, why don't people do this more often when they form the corporation? Is they just don't think about it? They don't get proper counsel? What's your experience there?
My experience is there has been one of two things. It's either they don't get the proper counsel, and because they're starting a business and it's pre-revenue in many cases, right? People put in their contributions of equity, and at the beginning of business, especially if it's a pre-revenue business, they have to watch those dollars closely, and everybody's excited and it's all new, and people aren't really thinking or valuing, what happens if somebody passes away or becomes disabled, or somebody wants to leave. They just don't think of the bad side of things. They're kind of in the romance stage of the business process. I would say that's most of the time that we would see that. And then, that's, and sometimes basically like the people, just like I said, either they don't want to pay for it, or they're basically just not seeking counsel. But usually it's because they don't want to pay for it in the romance stage, and they're just not looking long term.
Yeah, it makes perfect sense. And Andy, in your opinion, I would imagine that buy-sell agreements are living, breathing documents. Let me ask two questions. One, I assume you would recommend that people revisit these on a regular basis. But two, when they do revisit, what are some of the challenges in getting partners to sit down and revisit those documents? Because I imagine this is somewhat of an emotional issue, right? And it's almost, you don't want to say a negotiation, but in essence, it could be a negotiation, right? So what are some of the emotional things that come into play when you're looking at these buy-sell agreements and revisiting them?
Yes, in my experience, it comes down to the people's personal lives. There's sometimes you'll have one partner or shareholder saves their money, and another partner or shareholder spends everything they earn. And so there's some people that would, one partner over the course of years of running the business has a nice nest egg built up, and maybe the other partner doesn't. And they're really relying on that value of that business, to take care of his or her family, upon passing, just using death as an example. So when they go and revisit these documents, which is, sometimes very hard to get shareholders or partners to do in the first place, that's one of the scourges that we have. I would say, especially in the Chicagoland market, is that people tend to put these documents in place and don't look at them for 20 years, right? So if we can get them to the table and at least talk about, like to your question, we can get people to the table and actually talk about, adjusting the document, amending it. That's a big win. But when they get there, those dynamics of what's going on in their personal lives is a big deal. Because maybe one person is a little bit older, wants to retire quicker, or one person's a little richer, and as far as has that nest egg, and that all affects, what their goals are, and whether or not they want to adjust that price or adjust the terms of what's been set. And it could lead to some problems.
Yeah, I could see that. And one partner may be contributing more, at least from their perspective, than another partner, right? And so you've got the, equality issue that probably comes into play sometimes in some of these. But, I think you bring up a really key point for the M&A Unplugged community that, you do these documents and then you put them away. Used to be in a file drawer, but now you put them, in a drive somewhere electronically and you forget about them. But the business is a, living, breathing entity, and it changes and evolves, and so do the owners. And it's important to seek counsel from a firm like yours on a regular basis, just to make sure everything is, copacetic and the way that the parties really intend them to be.
You're right. But there's a larger theme. And the larger theme is, having a proactive attorney. There's a lot of attorneys and other professionals that are more reactive, like what the client has to come to them before something is talked about or thought of or communicated. One of the things that we pride ourselves on, especially in the corporate practice group and the estate planning groups, is that we tend to have a proactive mentality. So, and the analogy that I used for a lot of people is the sheepdog analogy, especially for, we're trying to protect the business, and we're trying to protect the family's estate. And many times the business is the largest asset, right? And the idea is that, we do see a tremendous amount of people due to custom and due to how things are in the normal course of business, over the course of the last 50 years, this, get the agreement done in place, think that everything's okay, and revisit it every 20-year mentality really causes a lot of problems. And when I talked about earlier in the conversation, it's the people closest to us, like our fellow shareholders and our fellow members or partners, that many times can be our worst enemy. And being proactive and making sure that these agreements or the expectations are being consistently set is something that I think a lot of professionals, including lawyers, should be really working towards changing that culture towards being more proactive. Because, if in my experience, if you don't have the corporate structuring done right, where you don't have maybe the real estate separated from the business, is an example, or you don't have maybe certain asset protection or liability exposing type of assets separated from other components of the business. If a wolf ever gets into the pen, that wolf can do a lot of damage to the sheep. And the people need to value the proactivity of the sheepdog, going around the herd, around the pen, and make sure that the herd is protected inside that pen. And that's something that we see a lot of. And I think a lot of business owners think they're okay, and they're definitely not okay. And they don't value the proactive lawyering, which is something that we pride ourselves on. And once our clients see it, we explain it, and we go into the details of, I always call it the why. Why do we do this? The clients see it, and then once they value it, they pay for it. They see the value of it, especially the people that had a bad occurrence in the past. They really see it.
Yeah. Yeah. I think you're bringing up some great points. And as you stated, I mean, business is typically, if not an owner's largest asset, it certainly usually is in the top three. And our analogy from, in the intermediary world is, I think the stats are over 75% of owners fail to prepare for their exit. When you think about that, that's just staggering. The largest asset or near the largest asset, and you're not taking the steps to protect it and prepare it to maximize the value. It's sort of mind-boggling at times, and a massive opportunity for firms like yours who are proactive, right? I mean, so that's kudos to you.
And part of that proactivity is not just lawyering; it's bringing in great organizations such as yours, or bringing in other advisors. I mean, even to the point where we have psychologists that we'll bring in to prepare the people. We'll bring in valuation people way ahead of time to make sure, and ask those questions like, what particular components of the business or issues need to be resolved, to create that value. And like it's a proactive approach, and it's also a collaborative approach that can really, put that person in the best position post-sale, which is ultimately, at the end of the day, with a lot of these businesses, that they're family businesses, right? And it is the largest asset for that family. And at the end of the day, after that asset is sold, the business is sold, we have to make sure that the family's okay.
Absolutely. So, Andy, you touched a little bit on life insurance. And I'm wondering if we can spend just a few more minutes on that, because this is an area that I think people just completely skip. Like, I can't tell you how many times, it may be 9 out of 10, where people are not even thinking about life insurance as an asset protection strategy. So can you talk a little bit about that and how you help your clients deploy the right, insurance strategies?
Absolutely. From the lawyering perspective, this is where the bridging of the business level planning and the estate planning is very important. And life insurance is a key ingredient in proper planning. So, for example, at the business level, right, life insurance is a wonderful tool to be incorporated with the buy-sell agreement or shareholder agreements, that if one of the shareholders or partners passes away, that there's cash instantly available. It's usually income tax free. And that instantly available pool of cash can pay the departing shareholder, their estate or trust, and it can provide for a clean break, between the shareholders who will continue on with the business and the family of the deceased shareholder, And if we can make that break clean and not have, connectivity there, many times that's the better result for the ongoing business and that family or remaining shareholders and the family of the departed or deceased shareholder. It's nice and clean. So that really keeps the business alive and active, especially if there's multiple families involved or various family members instead of a single family involved. And if that's coordinated correctly with the bridging the business planning to the personal level estate planning, is that the life insurance can play an incredible role of addressing estate taxes. Because in Illinois, under current law, if a family has assets, if a deceased has assets worth more than $4 million, right, which would include the value of their interest in the business and pretty much every other asset that person would own, there's a tax that's going to be due in Illinois. And then for the federal government, the exemptions are much higher. It's $11.4 million for 2019. And the life insurance is a wonderful tool to use to pay off estate taxes. And one of the key ingredients to this, I just want to make sure that your listeners understand this, is that the life insurance can be designed to be totally tax-free for estate tax purposes and income tax purposes by using the proper trust planning.
Wow.
Okay, so when you look at how the taxes are calculated, just one simple but very powerful idea is you want to pay the estate taxes with assets that are not included in the estate computation or the calculation. So you want to use tax exclusive assets to pay the estate tax. And irrevocable life insurance trust planning combined with life insurance, can save empires if it's done correctly.
Boy, Andy, that sounds like a podcast in and of itself. That is a meaty morsel right there that deserves some really serious unpacking. Let me just ask this question. So from a life insurance perspective, the business is buying the life insurance, but the beneficiary in this tax deferred strategy that you're talking about, the beneficiary is a trust that would then be responsible for paying off the estate planning tax liabilities. Did I get that right?
Yes and no. Most of the time we like to keep it separate. So the idea there would be the buy sell would be funded by separate policies between the shareholders and the fellow members. Mm-hmm. Okay. And then as far as the death taxes, the life insurance, that many times would be funded with a separate policy, because many times, not all the time, but many times, the life insurance policies that's used to pay the death taxes at the personal level is a policy that would be insuring both, the shareholder and their spouse, which they call a joint and survivor or a second to die policy, where the policies that you would use in most cases, amongst the shareholders or the members at the business level would be policies on those specific individuals and not their spouses. That's most of the time, that's what we would see. And it keeps it nice and simple and private.
Yeah, this is such an important topic that is overlooked so often by business owners. And I'm glad we got to touch on this today. And like I said, we may seriously want to think about a follow-up to this, because I imagine there's lots of additional information that people in the M&A Unplugged community would love to hear to deploy in their own businesses.
Yeah, we're very passionate about it, because the life insurance is one thing over the course of time. If you take a look at the financial planning community and other communities, life insurance is a tool that's underutilized, and it's something that's really necessary, and it preserves an enormous amount of value. Like I said earlier, if you can set up that irrevocable life insurance trust, put in a life insurance policy that's going to be permanent and will be there, the certainty that's provided by that tax exclusive, estate tax free, income tax free pool of cash to basically pay off the government and keep that business thriving. It's just a wonderful tool that's certain.
So critical. So Andy, we're about to wrap up here, but I don't want to leave the interview without asking you about M&A, mergers and acquisitions activity. Your firm is very active in representing buyers and sellers in mergers and acquisitions. And just like to hear from your perspective, what you're seeing in the market. Are you picking up on any new trends that are occurring or evolving things that you think will be important to communicate?
To be candid with you, the diversity of the type of businesses that we're seeing being sold and bought, I would just say at this point in time, it seems, based on the activity that we have at Kelleher and Buckley, it seems like the M&A marketplace is still alive and well. And I think the economy must be doing pretty well. I've heard of some retractions maybe coming in the logistics and trucking industry is going down a little bit in certain segments. But overall, we're just seeing a lot of activity right now. And, I think last year, I know we've done probably 75 plus deals or more. And it's just a lot of activity.
Yeah, we're seeing the same thing. There's been no slowdown at all. And I think you're right. The diversity of deals across all sectors has been, pretty strong. So
it's a great market now. And we still have, like we talked about in the past, there's access to capital, and there seems to be a lot of faith that things are going to be better in the future, and there's people that want to buy and they have the ability to buy. And then we see a lot of folks who have been sitting on their businesses for a long time, and they're waiting for the right price like everybody else. And we hope that they don't make the same mistake that they've made back in 2008 when they waited too long and the Great Recession hit and they got stuck in their business for the next 11 years. So I think a lot of people are remembering that. I still think that it's a big factor towards people wanting to go out there and sell. Especially with like I said, the free flow of capital and the desire to make money and having faith in the future.
Totally agree. Andy, it's been such a pleasure having you on. The insights you shared were tremendous. If folks wanted to get in touch with you, how could they reach you?
The best way of reaching me is on my cell phone at 847-682-5367. And that's my business cell phone number.
All right, Andy, thank you again. Really, really appreciate you being here.
Oh, my pleasure, Dominic.
So M&A Unplugged community, let me just summarize a few of the key points and takeaways from my discussion with Andy Kelleher. First off, you heard him talk about starting with the end in mind. If you're an owner of a business and you are contemplating the potential sale of your business, figure out where your end game is first, and then work your way back, and do it both from a financial, personal and business, and estate planning perspective. And once you have that clear picture, then bring in the right advisors to help you work your way back to figure out what you need to do to achieve that. The next big point that Andy talked about was making sure that you have all of your business level documents and issues in line and in good order, so that when it comes time to then do all of your estate planning and documents, that stuff will easily flow over. For example, we talked about buy-sell agreements and how important that is. Get them done early, revisit them on a regular basis. Life insurance, it can really preserve the value of the business and maybe even the entity itself. So critical to consider that. And little things like, they seem like little things, but they're not. Keeping up your minute books and all of your other organizational documents. And then the last thing was having a collaborative approach. You heard Andy talk about how his firm brings in specific advisors depending on his clients' needs and issues. Assembling a good team of advisors is so critical, and especially as you march down the path to doing a merger or an acquisition, having M&A specific professionals who can advise you. Hope you enjoyed today's episode. All of the information will be available in the show notes. If you would like to learn more about the process of acquiring or selling a business, please visit our website at sunacquisitions.com, or feel free to reach out to me at drinaldi@sunacquisitions.com. I look forward to seeing you again on the next episode of the M&A Unplugged podcast. And until then, please remember that scaling, acquiring, or selling a business takes time, preparation, and the proper knowledge.
Thank you for joining us today on M&A Unplugged. If you enjoyed the show, please subscribe, rate, and recommend it wherever you get your podcasts. If you want more great information on how to scale, acquire, or sell a business, please visit our website at sonacquisitions.com.